20-year low that was first reached in May. Here to help us get some perspective, Doug Butler, Senior Vice President and Research Director at Rockland Trust. Thank you for joining us, Doug. I appreciate it. I guess just what are your general impressions of these numbers?
These are fantastic numbers. The market has been doing incredibly well based on largely earnings growth, but also the stable job market. The jobs have been really strong in July's the last few years, so a surprise to the upside wasn't completely unexpected. But this sort of number is a blowout number.
Well, there's been a ton of talk about who can take credit for this, right? And so, and take politics aside, we are here to give it neutrally, but how much is something like this can a sitting president take credit for? How much is the natural flow of an economy? Can you give just people at home some perspective on that particular issue?
Sure. I think it's always dangerous for a president to take either credit or too much blame for how the stock market is doing. How the economy is doing does have some bearing on the president. The president does have some bearing on that. But I would say this, like the amount of instability that we've seen in Washington over the last 6 months and the failure of health care reform, the market's doing well sort of in spite rather than because. But the market also has really high hopes for the Trump administration continuing to push tax reform, continuing to push infrastructure spending. Infrastructure spending will be great for jobs and generally good for the economy. But getting that through Congress will be a tough ticket.
So we were near record highs in the stock market today. We might be at a record high with what happens depending on the rest of the day. So you talked about the expectations. A lot of people have bought stocks in anticipation of that. But what about the actual earnings? People at home, they don't necessarily talk about PE ratios and that. But in terms of companies making more money, how much of it is real? Are these real profits by these companies?
These are the American consumer is spending and companies are spending, and earnings growth is over 10% this quarter alone, year over year, which is a fantastic number. If we get earnings growth of 10% for the full year, which is what's forecast, the market should continue to grow.
And in terms of rates, I mean, people are always focused on that. We talk about the Federal Reserve. Are they going to increase the speed that they raise rates now?
They're probably not going to increase the speed. One of the things they're going to do in the fall is they're going to probably reduce the size of their balance sheet, which will take some bonds out.
For layman's terms, what does that mean to everybody?
It means reducing the amount of bonds that are available in the market, so that will generally, the supply will be lower, so that will generally nudge rates up. It's one of the ways they did after the financial crisis, one of the ways they kept rates really down close to zero for a long time. But as they do that, it's one of the things. The Fed is going to try and take their foot off the gas, as they've been trying to do for the past year. Getting that right's always a tough call.
Yeah, because a lot of, we're sort of dependent on their help, right, from after the financial crisis. But a lot of people like to see the economy stand on its own 2 feet. Doug, we really appreciate the time. Doug Butler from Rockland Trust. LaToya, back to you.
Thank you.
All right, thank you, Brian. Coming up, it's